listening to the Not So Black and White Real Estate Podcast with your hosts, Sir Colin Campbell and Gary A. McGowan.
Good day, good day, good day. It's your host, Sir Colin Campbell, here with Gary A. McGowan, and you're tuned into the Not So Black and White Real Estate Podcast. We have a special guest sitting here in the hot seat. He chuckles. He's like, no one told me it's a hot seat. Welcome. Surprise. It's George Dube. For any of you who've been investing in real estate, any of you who've been a member of RAIN, you guys would know George. But for those of you who don't, George, give us a quick 40 seconds bio of who you are.
George is a real estate investor who also happens to be doing the helping clients from a tax perspective structure their business activities, their investing activities, so more money is going in their pockets, their families' pockets, their charities' pockets, as compared to Revenue Canada's pockets.
Boo, yeah, we like that.
I'm intrigued.
Yeah, that's right. Yeah, we've Colin and I've had the pleasure. You mentioned RAIN earlier of knowing you for an awful long time,
Sure.
and I know you come from the heart of how do I give back and teaching and helping people through that, and I know one of your focuses is wealth management. So talk to us a little bit about that and how you're helping your clients plan for their future.
Absolutely. What we're trying to do is go far beyond what is the best way of organizing my business and investing activities today, and moving much more into what's going to be the best way for my particular situation, again, my family's situation, my charitable groups that I'm trying to support over what I'll call a short-term kind of 3 to 5 year time period, a medium term, 10-ish years, and intergenerationally. And from that, be able to map out, okay, how is this structure saving me taxes over time and not getting into a little bit of a bigger problem down the road, while at the same point being able to have a structure, if you will, that's going to allow me to scale up to do what I want it to do without having to have a fancy-dancy structure on day one if I don't need one on day one.
Yeah.
Right. Do you think sometimes people overplan before they start buying investment properties, or they make it too technical they're trying to shelter their tax or things like that? Or
I think they can get preoccupied where they're so afraid of paying a tax figure, they forget, if you will, that if I'm making $1 gazillion, life is good if I'm writing a check to Revenue Canada.
Of course.
But yeah, we just don't want to pay too much. And there's been a number of changes from a financing and tax perspective, really, I would suggest, that have really impacted how we are advising clients to set their affairs up. Starting really last year, we've just seen some mammoth changes that now give us an opportunity to talk to existing clients about how they're organizing their activities, and prospective clients, because we see a lot of advisors, quite honestly, they're not aware of the changes. And that's opening up a door for myself and my primary partner, Peter, to have these conversations with yourselves and listeners, viewers, just in general, people.
Interesting.
Right.
Now, as a accountant, financial strategist, helping people create more wealth for them and their families, I know you've worked with many investors over the years. What is the biggest mistake you've seen that is so common among investors that someone can take action just from listening to our podcast today?
To me, the biggest thing is they are thinking that they are too small to do something different with their structuring. And it can be very inexpensive to set up a corporation, for example, or alternatively, they have sat down with a quality advisor, but they have a couple of different things going on, and they're getting pieces of research, if you will, from various sources, and they're not keeping in tune with these changes that are always happening, and not just from a tax side, obviously. Mm-hmm. So it was wonderful that 5 years ago they had a wonderful, perfect structure for them. It doesn't mean that that's necessarily the case today in terms of where they need things to be. And so just by thinking that, I addressed that 5 years ago, I must be good for the rest of my life,
yes.
Completely inappropriate.
Okay.
Right.
Well said.
What are you doing to stay on top of the changes and the positive, whether it's positive or negative, however you would look at it from Revenue Canada. But how are you staying connected with that?
This comes from different ways, but I mean, one is being at a variety of different events. So you're talking with people in the trenches. What's going on? What types of things are people wanting to invest in? Where are they investing? I want to be talking to finance professionals. I want to be talking to legal professionals. From that pure tax side, I mean, for me, I have to do a lot of reading in terms of what are the current rules, what's changing. So I'm reading, practically speaking, or receiving information, practically speaking, on a daily basis in terms of what changed yesterday. What are people's opinions on these? I'm writing pieces on that. Admittedly, I find the best way of studying some of these tax newsletters and new sections that come out. Quite honestly, I love to sit down with a glass of scotch or a glass of wine or a beer, and now we're doing some heavy-duty work now. May not quite seem that to the untrained professional, but trust me.
That's right. I like it.
For someone who is, intends to stay up to date with how the market is doing, what are the different changes? What are you doing personally to grow and to expand your thinking?
Here again, I think it's talking with other people. I love to be able to absorb different opinions, how are people doing things, and then get into, okay, how can I take that piece or tidbit of information, apply it to my own situation, apply it to client situations? I clearly get to cheat to a degree in the sense that I can see so many people when I'm going through and doing tax planning with them. Okay, what are you finding working that works for you and your families? And I can see the financial results, because that's what I'm paid to do. And so again, I get to sample, if you will, and then sit down with other advisors, colleagues, investors, and hey, I'm thinking of doing this or this. And sometimes those ideas are warmly received, and sometimes not so much. But there's going to be input there to, oh yeah, I never thought of that from that particular perspective.
So do you have like a mastermind group with fellow accountants, strategists, or is it just colleagues in the industry to say, hey, you know what? I'm faced with this challenge here. I just need a soundboard to bounce some ideas off of.
I do both. So one, I do have a formal mastermind group. It is not with other, I guess there's one other accountant, but he doesn't practice any longer. But other investors, essentially, again, with different backgrounds, different things that they like to invest with, etc. I find that wonderful. I do really like talking with particularly the people that are leading up some of the different groups and the meetup groups and people such as yourselves in terms of who are really leading the charge in terms of getting information dispersed to people, chatting with these people. And from that more what I'll call technical perspective, yes, I do talk with colleagues internally and externally to my office. Often they're not specifically dedicated, if you will, to the same degree that I would be to the real estate sector. But still, there's aspects of general business or even other types of specialized business that can have applications for the real estate industry. And so I think if you get a little bit too focused on anything, you're missing opportunities.
Awesome. As we kind of wrap up here, I want to ask you this question is, and I don't think people pay enough attention to the exit of a property, for instance. What's some simple advice or even just some questions for them to ask themselves when they go to exit a property?
I think when they're acquiring, they should be talking about the exiting part of that process, right? And when we're kind of making up, if you will, that lifetime plan with that property, and some of those, the intention is perhaps to, maybe it's flipping a property, or maybe we have that intention of selling in a short to medium long term, whatever that may be. But let's start planning that now and ensure that we have actually the structure that we're going to need at the time of sale in place in most cases today, but certainly going to be ready for that, so we're not missing an opportunity, because often with the real estate, of course, as those properties are hopefully appreciating, that was the time we wanted to have the structure working for us instead of us having to do a little bit more hard work on that real estate itself.
Right. Well, always a pleasure to have you on here, George, and to connect with you. Great to see you here again. For George Dube and Sir Colin Campbell, this is the Not So Black and White Real Estate Podcast.
Now, before we sign off there, Gary,
good call.
How can people get in touch with George and Peter?
Best way is probably email, and that's gdube, G-D-U-B-E, at bdo.ca.
Say that again.
gdube at bdo.ca.
All right, that's us signing out, and you're going to get in touch with the pros. Thank you, guys.
Awesome. Thank you, guys.
Bye for now. We hope you enjoyed this episode. Make sure to click the subscribe button so new episodes will automatically be downloaded to your device. Please help us reach more people by leaving a rating and a review on your podcast player of choice. Now go make it an amazing day for somebody.